What's up, guys? Welcome to Unisys Weekly Fundamental Analysis. So let's look at the GBP, which is the UK. So the UK's gross domestic product (GDP) data released this week was better than expected, helping the pound stay strong. In view of the improved economic outlook, the Bank of England began to scale back its bond purchase program last week, and the UK vaccinations campaign has enabled the economy to gradually reopen. Analysts remain optimistic about the prospects of the UK's economic rebound. So, a strategist from the NZ Bank ING stated in a report to clients the UK's March GDP data was better than expected, highlighting the bright future of the pound. So it is expected that the UK's data for the quarter will be robust, which should further support the pound. After the latest drop in speculative positions, long pound positions should start to increase again. Next, let's look at the Japanese yen, safe haven yen. So the service industry confidence in April hit the biggest drop in a year as anti-epidemic measures suppress consumer spending. Japan's Minister of Economic Rebirth Yasumi Nishimura said on Friday that Japan's decision to increase the implementation of a state of emergency for three other prefectures with severe epidemics reflects the growing concern about the spread of the epidemic. So Tokyo and some areas in Japan have declared a state of emergency for the third time at the end of last month. So at the same time, relevant epidemic prevention measures have been extended to the end of May. Currently, they are still struggling to control the fourth wave of the epidemic. Analysts expect that the gross domestic product (GDP) data released next Tuesday will show that the world's third largest economy has contracted from January to March, as epidemic prevention restrictions have caused a heavy blow to the face-to-face service industry. And next, let's look at the euro. So affected by the stabilization of the dollar index, the euro closed down 0.14% to 1.2145 against the dollar, but hit a new high since Feb 26 to 1.2181 due to the news that the German government raised its tax revenue expectations. German Business Daily quoted a new draft government budget report as saying that the German government expects tax revenues from now to 2025 to be 18 billion euros, which is around 21.85 billion US dollar, higher than the November estimate. Part of the reason for the slight increase in estimates is that the German government's growth forecast is more optimistic. But the report said that the incremental part will only appear at the end of the forecast period. According to the German Business Daily, approximately 9.9 billion euros of additional revenue will come from municipal governments. 5.9 billion euros will come from the state governments and 2.2 billion euros will come from federal revenue. And prices in Germany, the largest economy in the Eurozone, are rising faster than the Eurozone average because an earlier tax cut was reversed and automatically increased the prices of most products and services. So with the rebound in oil prices, the Eurozone's inflation rate has approached the European Central Bank target of nearly 2%. So lastly, let's look at the Canadian dollar. Canadian dollar hits nearly 6-year high, so affected by the rebound in the US dollar again. The Australian dollar closed down 0.8% against the US dollar at 0.7780, and the New Zealand dollar closed down 0.41% against the dollar at 0.7247. So the dollar against the Canadian dollar had 6 consecutive negatives on a weekly basis, but the decline was not large. The final trade closed down 0.29% at 1.2101, although the intraday hit a new low of 1.2046 since 18th of May 2015. However, in the context of positive and optimistic attitudes towards global economic growth, commodity currencies will continue to be well supported. Okay, so coming up next is a forex calendar for next week. So, as usual, for traders who are gonna trade, so please set a stop loss. So because whenever there's news, the market will be volatile. All right. So that's all for today. Thanks for watching.